Hello and welcome to all our viewers. You're watching Countdown right here on Bloomberg Quint. The markets once again in the red, and this being a truncated week seems to have made a turnaround post those 3 successive weeks of gains that we've seen on the benchmark indices. Not much in terms of losses, but nonetheless from the high points of the day, we've still seen quite a significant correction. For the Nifty, we're down closer to 0.25%, and so is the case with the Sensex. And this time around, the Nifty Bank seems to have moved in tandem with the benchmark indices. So that losing closer to about 0.5%. And not the types that we've seen over the last few days where the bank Nifty has actually bucked the trend and seen gains of closer to 0.5%. We'll talk about all of the sectors and more, but I just want to quickly look at what's been happening in the European markets before we get the Nifty heat map on. Europe European indices are looking weak, so you've got the FTSE, the CAC as well as the DAX trading under by closer to 0.5%, so the weakness carrying forward into our markets, no respite thereof. The only silver lining probably in today's session has been the currency, which has seen some amount of strength that's coming in because of the holiday yesterday. You've got 2 days of trade that's culminated into today's move. More than 0.5% strength coming into the currency, 71.05 now, moving towards that crucial mark of 71. The heat map then, and what's making its move. So while we were talking about IT as a pocket which was looking weak on the back of the strengthening currency, today some of the IT names seem to have pulled back. So there is some interest that's coming back into the likes of a TCS, HCL Technologies, Tech Mahindra. These are the names that stack up in your gaining list. The top gainer, however, remains to be Z, 4% gains coming in there. Infosys, Maruti, some of the other names that gain ground. Amongst the losers, auto seems to be right at the bottom of the heap. M&M particularly down about 3% in the session. Oil marketing companies real under pressure. So you've got an HPCL that's down from the pharma pack. A Cipla loses closer to 1%, and you've got Reliance Industries, the big heavyweight, also under pressure by about 1/3%. Reliance Industries, remember, over the last few days has been one of the key contributors on the index on the losing side in terms of point contributions, also because of its weight in the index. Taking a look at the mid caps and the small caps, the broader markets and specific stocks there about. So while we're talking about IT bucking the trend today and seeing some amount of movement, even though there is strength in the currency, mid-cap IT2 has seen some amount of recovery. So you've got the likes of a Tata Elxsi, Mindtree, Emphasis that have seen some bout of buying coming back in. Other bigger movers that we have been keeping track of have been the likes of a Deepak Fertilizers, Chambal Fertilizers, very active space currently. So gains out there, significant gains coming in for both these counters to the tune of about 13% coming in there. Indoco Remedies, for that one, the stock was locked up on upper circuit, so doing good for itself. Volume buzzers, then Capital First, 24 lakh shares have been traded on that counter, and the stock gains about 9% in trade. You've got a Jindal saw 38 lakh shares traded. Indian Hotels is the other one that trades with gains of closer to 3.5%, and a good amount of volume movement as well. Aside from that, near 52-week lows, the stocks that are trading near 52-week lows, we've got a Care Ratings, which is down 1.7% in today's session, and SAIL looking weak, about 61 on the stock price near its 52-week lows. But that's what the market is doing on this current point. What's happening in the more liquid universe, the futures and options space? Agam is joining in for that. Agam, good afternoon.
Good afternoon, Devi. Now, well, the last 1.5 hours is going to be very important, and 2 reasons behind this. One is, of course, that we are seeing the weekend, ahead, because tomorrow is a holiday, it's a market holiday, which means you'll have a lot of traders out there who will close their positions. On the other hand, we're also heading into expiry, so we're likely to see a pickup in the rollovers, ahead of this upcoming week. What we're seeing right now is, while the indices are trending lower, there has been very little change in OI, especially the Nifty Bank, which is on your screen right now. That's hardly seeing any. So we're likely to see that the clash of both these aspects that I was just suggesting were playing out in today's day of trade. That said, let's pull up the India VIX and see whether or not there has been some amount of moderation there. No, actually it hasn't, because earlier in the day we were seeing a decline, testing the level of 19, but this time around we're starting to see another uptick. In fact, it's edging back towards the mark of 20. Perhaps a problem when it comes to option premium. Speaking of options, let's also pull up your open interest distribution currently. Your maximum open interest, of course, this is of course the change in OI, and it's on expected lines. What we're seeing is more and more writing around the 10,700, 10,600 calls. But as I was suggesting earlier, what we're also seeing is a 10,700 call now once again taking precedence in terms of maximum open interest. On the lower end, of course, it is the 10,500 option. That's a 10,500 put, which has the max OI. Moving on, let's take a look at some of the stocks as well. And Apollo Tyres does stand out, considering we saw some strength yesterday, but today there's a lot of weakness coming through, 15% added in open interest. Moving on to the next stock, we also have a lot of traction in ACC, once again on the losing end, and fresh shorts building up there as well. Among the other stocks that we are also watching out in trade is something like a bunch of OMCs actually, but Hindalco is right there on your list, and you're seeing a decline there as well. I also want to address some of these OMCs, because we are seeing, of course, this Bata India, again, the same trend playing out. We are seeing weakness, but when it comes to something like a BPCL, HPCL, once again, they remain volatile. HPCL out there is declining in trade. It's the same for BPCL as well. So some positions being closed, considering the strength that we've seen in OMCs through the course of the week. And I'll be watching out for some of these names as well today, Devina.
All right, that's the futures and options space. Remember, next week's going to be expiry. We're going to be keeping a close eye out on how the rollovers shape up as well. Let's begin a market discussion with Shailendra Kumar of Narnolia Securities. He's joining us on the show right now. Shailendra, thanks very much for taking out the time. What's your initial sense that you're getting? Last 3 weeks have been particularly good. Some strains of weakness coming in this week?
Yeah, so if you ask me about a couple of days movement, so what we are seeing today also is kind of a reversion. So everything which was performing better in the last few days has got, some kind of a profit booking, and the defensive are doing better, like as you said. Now, it's a truncated week, and the US markets are trading quite volatile, the kind of slippages we have seen there, particularly in the FANG stock. So trader would not like to have very high long position, at least till a couple of days, till US stabilizes. Now, having said that, if you look at a medium-term picture, the earning is now going to start supporting the market as far as a 6 months to 1 year view is concerned. For FY20, if we take an earning estimate of 620, that what we have, something like a 17.5 time, 17 time we are trading right now, and 16 to 16.5 time would be an ideal support from where one should start at least accumulating the stocks, and that in terms of Nifty would be close to 10,000, 10,200. So that would be the base for the market for. Now, there will be volatility continuing from here on, because election-related uncertainty, I don't think, is already factored in the market. So on the upside, there will be bout of profit booking, but on the lower side, you have a base around 10,000, 10,200, where one should surely start accumulating stock for a longer-term purpose.
Shailendra, good afternoon. I just wanted to understand, looking forward in the near term, I know elections, the state elections is going to be an important factor, but if you, besides that, what are the other triggers that you're keeping an eye on in the month of November as well as December going forward?
Yeah. See, what we have seen over last 4 to 5 months is that, say, crude, for example, between June and September, October, you saw a sharp rally in crude, and then the rupee also fell accordingly because of macro impact of the crude for Indian economy as such. And then October, November, now we are seeing sharp slide in crude. So what I'm trying to convey is the bigger market, the macro picture is such that the critical data points are changing almost on a quarterly basis, right? Now that makes market very difficult from in terms of macro impact on the market. So, and these macro directly impacts the earning multiple, the valuation multiple of the stocks, right? So the idea from here is to ignore the those issues, the macro issue which will impacting the valuation multiple, because we have already clubbed close to 17 time 1 year forward. So the idea should be to stick to those names where earning growth is there for next 2 years, and every time market is giving you opportunity in terms of slide because of macro region. So I keep saying, like, we started the fall in September thinking oil and rupee, right? And then middle of the fall was all because of liquidity crisis related to NBFC and position unwinding by margin traders. But now the fall is happening because of truly global region. So US has fallen, a lot of other things has happened. Now, this kind of an environment where you are not falling because of your own region is surely a very good area where one should start building portfolio from 1 year point of view. Of course, election uncertainty will give you opportunity again and again to buy good names.
If you have to put money right now and you talk about starting to accumulate, which are the areas of interest for you that one should start looking at? Is it going to be the more beaten down names like the ones like auto for that matter? There is an interest in capital goods as a pocket, and also real estate keeps coming about in conversations where now the more stable names that have been able to weather through a patch of low liquidity because of what's been happening in the NBFC space will likely turn out to be the more stable investments from an investor point of view as well.
Yeah. See, what our view is like from here on, at least till election next year, the market will be very neutral to cap and themes. What I mean by cap and themes neutrality is like, so you saw in 15, 16, 17, if your portfolio was more focused towards the small cap segment of the market, your portfolio did much better than if your portfolio was focused on large cap only. And this year you saw, if your portfolio has more weightage in mid cap and small cap, you saw more kind of a slide than if you had your portfolio in large cap. So cap was a very important segment which was determining the portfolio return, not the other way. Similarly, in terms of theme, what you said also right now, you know, if you were in the retail focused businesses, B2C businesses over last 3-4 years, and what you call compounder, right? And your portfolio return came because of your positioning was very right. Now, what I believe right now is we have come to a point in terms of valuation and the business cycle where irrespective of which kind of a segment you are in, your return differential will not be very high. So if you build right now your portfolio based on a small micro cap theme or a large cap theme, return over next 1 year will be very similar. Similarly, whether you build a retail side of, so you buy most of the retail franchise name in your portfolio, or you buy most of the B2B businesses, the manufacturing sector and the capex driven sector, return differential among various themes and various cap will not be there for next 1 year. Now, the ideal situation in these kind of circumstances is to just focus on the bottom of stock picking. So every good name, whether a retail franchise or a B2B franchise, a large cap stock or a small cap stock, if in the next 2 to 3 years you have a certainty of profit growth, and a profitable profit growth means good ROE and good cash flow along with the profit growth, those bottom up names should one start buying right now, irrespectively thinking the macro theme, because that I think macro theme at least for a year will not be the key ingredient in the portfolio return.
Okay, Shailendra, you like a Federal Bank, why?
Okay, so like one name which somebody can start accumulating right now is Federal Bank. You know, it is a very right mix of retail versus corporate. So 50% of the loan books towards the retail and SME and 50% towards the corporate asset. Among the corporate side also, the 70% plus portfolio is on a top rated corporate. In the past, if you look at the management pedigree, the loan that they have given is not in the riskier asset as such. The slippage as well as the credit cost has remained very stable and will remain very stable. Management has also guided that in this financial year FY19, the last quarter they'll exit at a ROA of 1%. Now that gives you a very good cushion that this bank can be, you know, have a target of around 1.25 times price to book, which will give you about 93-95 kind of target in the shorter term.
All right, we'll leave it at that. Thanks very much, Shailendra. Appreciate you taking out the time and sharing your thoughts and views with us here on the show. So Federal Bank is one stock that makes it to Shailendra's list of buys. The focus is going to remain on what's happening in the auto space. Remember, we've been talking about the underperformance of the auto space on a one-year basis and how most of these stocks have seen a year-over-year decline, not just stock prices, but you've seen a dwindling festive season weighing down in terms of the high inventory build-up for most of the auto dealers as well, and whether or not that has a significant impact on the kind of new orders that they place with companies because of the inventory pile-up, and that in turn affects volume. Let's find out all of that and more with Ankit Merchant. He's the auto analyst at SMC Institutional Equities. Ankit, thanks very much for taking out the time. Lots been happening in this space. We've been talking to various, dealers and the Auto Dealers Association, which is very concerned about the fact that this time's festive season was not up to the mark. They're sitting on a huge inventory pile-up, which they're actually not seeing going away anytime soon in a meaningful way, which in turn could affect their new orders with companies and then could affect volume growth, which so far, has been just at par. What's your reading of the situation?
Yeah, good afternoon, Devina. So, what we understand is basically there have been four factors which have been played out, and which all of these four factors played out at a similar time. So, first factor is, as we know, is rising fuel prices. That has been the major, concern for an urban commuter, basically one who's been traveling approx, 100 kilometers every day, and the incremental cost because of the fuel price hikes has been very large for this particular market, has been for the urban players and for the urban customers. Coming to the rural, as what we understand is basically the MSP prices, as we know, will take time to come in. So over there also, from their point of view, the demand for the automobile haven't turned up till yet. Second, as we understand, is the insurance cost, and insurance cost we know is that has gone up substantially. For the two-wheelers, it's now mandatory to have 5 years of insurance, and the incremental cost is in the range of 7,800. So suppose I'm a new buyer today, if I want to buy a new motorcycle today, my incremental cost is likely to be near about 7,000 rupees. So that's one point. And coming to the passenger vehicles, the incremental cost for a 1500cc engine has gone up to 24,000 rupees. So that's the upfront cost which has gone up substantially. Third is what we understand is the competitive pressure amongst the OEMs. Now, as we understand, the pie has shrinked, and for every particular slot, everyone is fighting and everyone is going full to get that extra margin, to get the extra particular market share. They have been fighting a lot. We have seen this for the two-wheeler space, and the last one is basically the liquidity crisis which happened. So what has that done is basically the new buyers which were supposed to buy are actually thinking that right now the interest cost has gone up, my insurance cost has gone up, the fuel prices are also very again high. So why should I buy it right now? So what I understand from my particular analysis is that will take some time to recover from this particular events which has happened. Yes, the crude prices have come down recently. And what we also understand, the dealer inventory is also again very high. That will take time to flush out. So what we understand is from January onwards, we could see some fresh buying happening. We could see the dealer inventory moving much faster. And then, in fact, we will see the automobile numbers coming in very strong. So that's my reading from the current scenario.
Right. Ankit, good afternoon. This is Agam. Then my question is, if I were to dissect the entire sector, and let's start by talking about your four-wheelers, the passenger vehicle players especially. Which of these names do you expect to do relatively better? I understand that you're not expecting a significant uptick given the terms and conditions that you've spoken about, but which names do you think could do better, and which names are at a significant disadvantage given the current conditions? So
we particularly like Maruti Suzuki. One reason has been we clearly understand it's a market leader. 53% of the market share is with them. Yes, there has been some basis points lost of the market share, and that has been gone to the Hyundai. But all we understand is, see, as soon as the revival will be happening, the Maruti Suzuki is likely to be the key beneficiary. You name it in any particular segment, be it Mini, be it their sedan, or be it their UVs. They all have very good demand. In fact, still till today, Baleno and Brezza has been having a waiting period. Except you take out Baleno and Brezza out of the industry. You tell me there are no other vehicles which are having a long waiting period. So that's one particular advantage which company has been having. Yes, but because of Brezza, again, because of the high waiting period, what has also happened that some of the Brezza buyers have now gone into buying Nexon or be it some other SUVs in that particular space. But still, there has been the core premium which Maruti Suzuki enjoys in the eyes of the in the eyes of the consumers is really what attracts us. And one more supporting point has been the valuation. Company has been down from approx 10,000 levels, which it used to trade. You're getting a similar story, which was 6 months back. We were playing the same particular story. Yes, in the interim, there has been demand has come down. The numbers have been not been that great, but partly the numbers are also been impacted by the export numbers. I was just looking at the export numbers from April till date. The numbers have been declining like 10%, and that's a really a big number. The second most the second most line item which has declined for Maruti Suzuki has been the mini segment. Now, mini segment has been down close to 6.5% from April till date. The major reason for this particular has been the Ola and the Ubers, where there is not much of addition of the new drivers which have been happening, which has led to some bit of demand. And the new buyer, as we understand, the new buyer is more keen towards buying the the entry level segment more, and the insurance cost and the other cost which has gone up has basically led to demand being extended, or demand which has been delayed, which will surely come back post January onwards. In fact, I won't be shocked that December numbers, in fact from the December numbers, because of the sale, we could see major amount of dealers inventory getting flushed out because of the December discounts which happens every year. So Maruti is one particular pick in the four-wheeler space. Moving on, we particularly like Bajaj Auto as well. Bajaj Auto, as we understand, has been gaining market share. There have been twin factors over there. One is the domestic performance. Second has been their exports. They have been doing really well in their export segment also. Yes, the stock has been beaten down because of the margin guidance. But again, what I understand, the realizations from quarter one of FY20 will be at 71 rupees for their exports, which will compensate for the margins which have been getting lost right now. So, structurally, if anyone or a long-term player who is keen to investing into the automobile space, I think at this particular juncture, Bajaj Auto as well as Maruti Suzuki provides a good opportunity. Now, coming to CV as a segment, we believe the liquidity crisis is going to hit mostly to the CV players. What we'll see is that over the next 2 months, specifically, the CV demand, or for MHCV specifically, will be coming down a lot, but which will be again compensated by the LCV sales. Now, rural demand will start kicking in from January onwards because of the harvest season, and we can see some bit of revival coming in from there. Another major factor which is likely the market is right now missing out is basically the transition to BS6, and a lot of pre-em buying will start. So April onwards, we'll see a lot of pre-buying which will start coming in every day for MHCV and LCVs. So in that particular space, we like Ashok Leyland. The stock has been down 60% from its peak, and at this particular juncture, it provides a lot of comfort for us to enter into the stock. Yes, there have been issues. Basically, the Vinod Dasari has resigned, but he's still there till March, and we remain confident. It's such a big company, and it is run by a professional. So we continue to like Ashok Leyland and from this particular levels also.
Okay, so that's Bajaj Auto, that's Ashok Leyland, and that's Maruti that you like. I'm probably going to move out a little bit, so zoom out a bit and talk about the peripherals as well. So the auto ancillary pocket tire companies now gain center stage as well because of what crude oil has been doing. So the likes of a Seat and Apollo tires, whether or not you actually see some improved traction within the auto pack, within the auto ancillary pack, and within the tire companies in particular, and whether you like anything there.
Yeah. So in tire space, what we understand is, one, there has been severe cost pressure because of the crude oil prices. Second has been the natural rubber prices, but what we understand that has come down over the last 1 month, and the crude also has come down. But the real benefit they'll start achieving is when the OEM will pay the price for them, and which is very unlikely at this particular juncture. So tire stakes, we remain a little bit cautious, and we will enter at levels where we will find more comfort. However, that said, C8 is what we like at this particular juncture, but again, valuation is where we'll like to see. Stock has gone up substantially from it was at 1,000 levels, now it has been trading at close to 1,200. So that's really a it has appreciated a lot over the last 15-20 days. But we'll look out for more players in that particular segment in tires, and where valuation gives us more comfort. Moving to the other auto ancillary, again, most of these auto ancillary companies are going to face issues with the cost, because OEMs are not taking that particular cost right now, because OEM itself have been battling with their own particular cost. So any price hike by the auto ancillaries as such to the OEMs is very unlikely. So margins are about to shrink for the auto ancillaries in this particular market. But however, there have been companies in this particular space which we really like. One is Talbros Auto. That's one particular company which has stood out from the other auto ancillary segment, where the margins quarter-over-quarter as well as year-over-year has gone up, and that is purely on the basis of the cost restructuring which they have done. So Talbros Automotive, we are very much positive on that particular company. Again, a very small company, but you look at the growth prospects of that particular company has been phenomenal. Again, has a very well diversified client, has exports, is equally present into the domestic, and is a market leader when it comes to making gaskets, have close to 40% market share when it comes to making gaskets. So that's one particular company which we really like, and we continue to be positive on Talbros Automotive.
Okay, Ankit, we leave it at that. So thank you so much for joining us and taking us through your views and how you read these variables in the auto industry. Thanks, but Bloomberg Quint has also spoken to a lot of representatives from the industry itself, and this is what the Federation of Automobiles Dealers as well as Hyundai has to say. Listen in.
So festive demand has not been good as per our expectations. And to be very frank, this kind of slowdown we saw last in 2013. Even though the dealers were expecting that demand will pull up after 2 or 3 months of slowdown, and we were high on inventory, the sales has not been such, and specifically Navratri and both Diwali seasons were very bad for the dealers of the automotive sector. We had, in anticipation of the festive season, we had piled up on inventory, and before the festive season began, two-wheeler dealers were sitting on a 60-day inventory, which only came down to 50 days post the festive season. According to us and the research which we have done and the feedback which we are getting from across the country, we see that the overall sector has come down during the festive season compared to last festive season by around 20%. And the biggest hit are the two-wheeler segment and the passenger car segments.
For Hyundai, the overall festive season was a good festive season, because not only the Santro gave us a very strong start, but all our products, whether it was the Grand i10 or the Elite i20 or the Creta, in fact, all of them sold more than 10,000 units in the month of October. So basically we say that it's a history of sorts, that all our flagship models, which have been the Indian car of the year, so on and so forth, have actually become a trendsetter as far as the segment is concerned. And all of them have been showing excellent performance in terms of volumes, and we've been consistently doing more than 10,000, 11,000 numbers with them. So along with these three cars, overall our volume is close to around 40,000, considering only the Grand i10, the all-new Santro, the Elite i20 and the all-new Creta.
Well, we move into the final hour of trade, and let's take a look at all the stocks that are buzzing. So we have Sharad Dubey joining us to give us that list. Sharad, good afternoon.
Good afternoon, Agam. So the first stock I've picked up is Deepak Fertilizers and Petrochemicals, which is up by almost 13%. It's highest in a week. So basically the company says the normal operations have resumed after the IT department has left their offices. You see, since November 16, search and seizure operations were going on. The second stock which I've picked up is Indico Remedies, which is up by almost 2%. It's highest in a month. This is based on the news that its 2 facilities in Goa have cleared the US FDA inspection, with 2 minor observations reported. Apart from this, the facility has also received a warning letter way back in March 2017. The third stock which we have picked up is Indian Hotels, which is up by almost 3%. Based on the MOCL, Motilal Oswal's report, they have initiated a buy with a target price of around 163 odd rupees, and they cite the reason that there's an attractive play on upcoming industry upcycle, and also they expect margins to increase by 500 basis points over the financial years 18-20 due to operating leverage, and they also expect the ARR growth of around 8 to 10% of occupancy reaching the optimum levels. Back to you.
All right, Sharad, thanks very much for that. Those are three stocks we're going to keep an eye out on. Nitasha Shankar of Yes Securities is joining us on the show as well. Natasha, thanks for being here. Let's talk about the market mood a little bit. Seems to be slightly more cautious this time around. We're not seeing heavy cuts, but nonetheless, this week is truncated. We're already seeing a tinge of red, so closer to about 0.5% is what we'll give up for this week, not compared to the gains that we've had in the last 3 weeks. But would you say that people are refraining a little bit now ahead of the crucial state elections? There's going to be more volatility, so decision making in terms of what stocks to invest in has taken a little bit of a pushback.
Absolutely. This is something that we spoke about last time as well, that we do think that the volatility is going to go up, and you will have these weeks wherein investors would sort of be holding themselves back and prefer for the key events like state elections as well as the RBI meet to go through before they start investing in it.
Okay, so being prepared, and there's some corners of the market that talks about being ready to go ahead and buy those high beta names, but at the same time being already invested in defensive names to make sure that you're not completely out of market participation. Is that something that you would propagate to?
So I don't really think that high beta or defensive is something one needs to be thinking of their portfolio that way. The best thing to do is to understand what is your risk potential, and if you can take the risk, this is a good time to accumulate the high beta names from a long-term perspective, of course, not really from a 3 to 6 months perspective, because you will see a lot of volatility coming in over the next 3 to 6 months. Having said that, if you do not have the risk appetite to go ahead and take high beta names, then it is always better to keep defensive in the portfolio, because if you're looking at the long term, equities is the only asset class which has actually delivered consistently long-term returns if you're looking at 10-year or 15-year period. So it is always good to have certain amount of money invested within equities, but it depends upon what your risk appetite is when it comes to choosing between high beta names and the defensive names.
What are you guys factoring in when it comes to the upcoming RBI meet? Of course, it's a bit far off, but we have seen some macros information come in. How are you reading these variables, and what is your expectation here?
So essentially, our house view is that we could see interest rates being held at current levels because the numbers coming in on the inflation front have been quite heartening. At the same time, of course, liquidity is something which is required in the market when it comes to boosting the next leg of economic growth.
Sure.
So that is something which the RBI would be keeping in mind.
And how are you reading cues on crude? And I know it's a tough one to call because no one really knows where crude is going. But at this point in time, how are you guys helping your clients position themselves when it comes to stocks which have exposure to crude?
So essentially, we don't really have any call on crude, but we don't think that crude should go up from these levels, and we do think that crude would continue being at these levels. So companies which use crude as their raw materials, essentially on the paint side, because the growth that we expect on the housing side as well as from the consumption segment,
right,
we think would be able to offset any slight increase in crude which we could see. So we're quite positive on the paint companies.
Right.
As opposed to the OMCs, which also benefit, but then they have their own issues which go on.
Sure.
Okay. Not just paints, but let's talk about tire companies in particular. Not having a very great run so far. Do you track tire as a space?
Yes, we do track tire, and within the space, Balkrishna Industries is our top pick. The company has a niche as far as the OHT tires are concerned. They've been able to ramp up the capacity in the new plants as well, which has helped to gain the benefit of operational leverage as well. The mining segment as well as the OEM segment are expected to start contributing meaningfully as well, which in turn would help in margin improvement. So that is our topic within the tire space.
Okay, I just have a follow-up question, Nitasha, on Balkrishna. Well, they have cut their guidance when it comes to volumes going forward. It's seen a bit of correction. So you see this as an opportunity to buy into Balkrishna Industries?
Absolutely. Now the volume expectations of the guidance have actually been scaled back.
Right.
And that is the level that we had been factoring in when we were really looking at our estimates on the stock. So at current levels, the valuations are quite attractive. So we would start accumulating.
All right, but I was actually looking at the analyst recommendations, and if we can pull up the ANR on Balkrishna Industries, you'll notice that out of the 14, 15 odd analysts that we have on Bloomberg, actually it's more than that. It's about 20 odd analysts you have on Bloomberg. Well, about 12 have a buy rating, so that's about 60 odd %. And we just have one sell rating on this one, and with a return potential of from current market levels of 15%. This is despite the fact that, of course, the company has come up and suggested that volumes could be lower going forward. And as Nitasha is mentioning, this is an opportunity to move in after the kind of correction that we've seen. That said, what are you doing with consumption right now? Let's just talk about staples then. We've also seen valuations come off to a certain extent, but, well, they're always going to remain expensive. What are you telling your clients with respect to FMCG stocks?
So I think it's a very good time to accumulate the FMCG stocks. Usually they're trading at very high multiples, and the kind of correction that we've seen in the recent past, which was largely driven by the knee-jerk reaction seen across the market. So we are getting them at attractive valuations. Of course, one can always argue whether a 40 times multiple or a 50 times multiple is justified for them or not. But if you're seeing the kind of demand growth coming in from the rural side as well as from the urban side, and that's something which is only set to go up in the coming quarters and the coming years. So if you're looking at that, then these valuations seem to be justified, and any dip that you see in them presents a good opportunity to accumulate.
Okay.
Autos as a pocket, we've had a long drawn discussion with with the Dealers Association. We've spoken to companies, we've spoken to the analyst, stock analysts, and while pressures currently are still there, they all sort of point towards an improved environment down the line. So does one prepare for that now? I mean, in a stock like Maruti, which has already run up from 6,500 back to 7,400, but not still at those elevated levels of 9,500, closer to 10,000.
So I think it's a good time to start accumulating these stocks, really not buy into them in one go, because the pain that they're seeing right now is something that will persist at least for the next 2 to 3 months, in our opinion. So given such a scenario, I think the stock will give you an opportunity to keep on accumulating at lower levels. Of course, if you're looking at the long-term view on the company, it is extremely healthy. They are the market leaders on the passenger vehicle side, and they have been introducing profitable models as well, which in turn is helping them improve their EBITDA margins. So we are quite positive on the company from a long-term perspective. So I think about 2 to 3 months is a good time to accumulate the stock.
All right. One stock that I wanted to ask you about, and this was something that came about, a lot of our viewers have been asking about it on a constant basis, is Vedanta. Now, if you see the stock from levels of about 340 odd, the stock has come down to sub 200 in today's session. I mean, and there is no visible signs of improvement. But would these depressed levels prompt some amount of buying to come in at this point, or you'll just stay off completely?
From Vedanta, we would prefer to stay off. We would prefer to invest in Hindalco. Again, that would be more of an accumulation rather than a one-time buy, because markets are pricing in the lower metal prices, into global metal prices. So that is something which would, sort of put pressure on all of the metal stocks, Hindalco included. We would prefer Hindalco. All base metals, steel, aluminium, it really doesn't matter which one you're looking at. So all of them would remain depressed. Within the pack, we just like Hindalco and JSW Steel as of now.
Okay, Nitasha, I do want your take on the Indian information and technology sector. But before that, I just want to take a look at how the valuations have stacked up right now, because we do know that a lot of these IT companies have corrected to a certain extent over the past, I would say 3 to 4 weeks. Now, I had ran a check against the price to earnings ratio of 2-year averages and 5-year averages, and that's your FY19 estimates. Well, naturally, your FY19 estimates are forward looking, so they they may be lower, yet when it comes to the likes of TCS or Infosys, they are largely in line. Wipro and HCL Technologies, of course, substantially lower, but that's also because we've seen that correction come through for Wipro and HCL Tech along with Tech M. Let's take a look at the mid-cap space now, and lower down the order when it comes to your stocks with a lower market capitalization. L&T Infotech, well, okay, the correction hasn't been so profound, but look at the likes of Hexaware and Cyient, once again at significant discount to their 2-year and 5-year averages. Move lower down the order when it comes to your market cap, and again, what stands out here is Tata Elxsi. Of course, it was one of the most expensive stocks in the entire pack, and Persistent Systems again trading at a considerable discount now as compared to what we saw in the previous 2-year and 5-year averages. This is, of course, only for reference for our viewers there. But Nitasha, how are you viewing this sector now, and what would your picks be in this sector?
So we're quite positive on the sector as a whole, but having said that, we would prefer only a few stocks within the sector.
Right.
Because some of them still have certain client-specific as well as, deal-specific issues which are still persisting, and that is what is leading to such depressed valuations over there. So we prefer the two large caps, that's TCS as well as Infosys. Of course, we would prefer a bit of a correction coming in before we buy it. Another one that we're positive on is Oracle Financial Services. That's a niche business,
right,
and the company deserves the kind of premium valuations that it gets. At current valuations, it looks quite attractive again. Within the mid-cap space, we are positive on Persistent. We think that they've now put all of those issues behind them,
right,
and going forward, they would see a better traction. And also on KPIT Systems. So these would be the top picks within the IT space.
Okay. All right, Nitasha, it was a pleasure speaking with you. Thank you so much for joining us and taking us through your views in the markets. But moving on, once again, paint makers will also be in focus, considering paint makers were forced to hike prices in September quarter on rising crude now. The paint industry is grappling with the conundrum of falling crude prices, which could soon spark price cuts. So to get a better sense of how the paint makers are thinking about the new crude scenario, well, Neeraj Shah had a chat with the Vice Chairman of Shalimar Paints, Ashok Gupta. This is what he had to say. Listen in.
Crude, or for that matter, any other raw material increase or decrease has a direct impact on the profitability of the company. We tend to pass on this increase or decrease in raw material to the consumers. Definitely there is a lag. As and when the prices of raw material increase, by the time we are able to pass on to the customers, it takes around a month, month and a half. The same is true with the decrease as well, though the pass on may be slightly faster. So far as crude is concerned, the prices had gone up sharply in past few months, and we are able to pass on the cost increase to the consumer in the month of October. We'll have to wait and watch how the crude behaves in next 2-3 months. In case the prices really come down, then we will have to see to what extent the correction may be required in the paint industry. But at this point of time, there has not been any significant change in our profitability due to crude price variations.
Would you reckon, sir, that for the industry at large, and if not for Shalimar, that with the presumption that crude prices don't go back to the levels that they were trading at, would there be some uptick and a meaningful uptick in margins and thereby profitability, net, ceteris paribus, other things remaining constant, over Q3 and maybe Q4 in particular?
Our profitability should definitely improve, because we had taken a hit in the quarter July-September because of the increase in the crude oil prices. Since we were not able to pass on the increase immediately, it took some time. Now that the crude oil prices are stabilizing at a reasonable level, our margins should go back to the level they were prevailing before Q2. So we feel that the margins will slightly improve in the next few quarters as compared to last quarter.
Okay. How is the demand scenario shaping up? I'm guessing that because you've decided to step up your capacity, re-establishing the Nashik unit, I'm guessing that you are seeing traction in demand coming in. Can you paint the picture for us, literally and figuratively, as to how is this industry demand looking like and demand for Shalimar looking like over the course of the next, say, 6 quarters?
Fortunately for us, the paint industry is always colorful. The demand has been steadily increasing, growing at around 10 to 12% year after year. Despite the changes in the economy, the demand growth has been stable in the paint industry. So far as Shalimar Paint is concerned, our market share is pretty low. It's around 1–1.5% only. So there's a huge potential available for us to increase our output. And even if we double our capacities, even then our market share will be only 2–2.5%. And with the kind of technology and the kind of R&D and the depth in distribution we have, I think we have a good potential ahead, and it should be possible for us to increase our revenues to the extent of our capacity increases.
So what's happening, Mr. Gupta? Is it that the industry is growing and you are growing along with the industry, or do you believe that at some point of time, with price adjustments or better quality products or a mixture of both, you will look to take away some of the market share from the existing players? How would the next 4 or 6 quarters shape up?
So the industry is growing at 10–12%, and obviously we are going to grow much faster than that. We are almost increasing our capacity by 50% by next year and a year after that. So we are going to grow at much faster pace. And the reason why we will be able to grow much faster is that we have lost our market share in last 3–4 years. We had a good brand presence, we had a good distribution. So the demand for our product is there. It's only that we were not able to fulfill it. Now that capacity will come into line, we will be able to fulfill those demands. So obviously we'll go back to our original levels and even higher than that. You may perhaps remember at a point of time, Shalimar was selling almost double the quantities it has been selling now. So I think the demand exists for our products, and we are very particularly strong in industrial products. In the industrial paints, we have very good presence, and the demand for industrial paint is growing almost at the same pace as for decorative. So coupled with these two factors, our growth in the coming days will be much faster than the industry growth.
Okay. So 12–13% in the industry growth rate. Organically, without the capacity coming in, would you believe that there is scope for higher growth? And with the capacity coming on stream, I presume in May or June next year, what are the numbers that you're penciling in? If you can talk about these numbers, Mr. Gupta.
Okay, so currently we are doing around 70–75 crores in a quarter, last quarter our revenues. With the new capacities coming up, it should be possible for us to even more than double the numbers in next 1–1.5 years. So we are trying our best to ensure that the entire capacity is utilized. If that happens, then obviously we will be more than doubling our production and the revenues.
Okay, and would two factors out here, Mr. Gupta, and just want some clarity here. One is the higher capacity utilization naturally would mean better margins for you as a company. Two, how much of, I mean, if you can, via an example, tell us how much of a benefit would come into an average paints company as a result of, what, a 20% slide in one of the major raw material prices, that is crude?
When last time the price of crude steel had gone up by around 15–20%, our input cost increase has been almost 3–4%, which partially we had passed on to the consumers. Similarly, when the prices will come down by a corresponding figure, our raw material cost also will come down by 2–2.5%, which will basically mean that our margins will go back to the pre-increase in crude oil prices. Now, so far as our demand is concerned, when we increase our output, we are likely to increase our output of those paints which have a higher margins. So obviously, on overall basis, our EBITDA margin should improve from the current level rather than going down. Even though we'll be increasing our volumes, our volume increase is going to come in those products where the EBITDA margins are higher. For example, emulsions. So our EBITDA margins will improve from where we are currently.
Okay. My final question, sir, and I want to ask you about when you will turn to profits or losses, because I understand you are in the midst of a rights issue and therefore may not be able to talk too much. But just that one quick point, and just this might be an industry facet as well, which I want to understand from you. Because you would have hiked prices in some measure with the higher crude prices. Now that the crude prices have fallen, I'm presuming you are not going to slash prices immediately because crude prices may rise again. It's a very volatile commodity. Are we to assume that for all the right reasons that the October to December quarter might see paint companies at large being able to show much better operational metrics because of higher prices but lower raw material costs and the inability to pass it on immediately?
Normally, it so happens that whenever there is a change in the raw material prices, there is a lag. By the time the output prices also change. Same is likely to happen this time as well. So October and December, we are not likely to see much of a change in the finished good prices. So obviously, the benefit of reduction in the raw material cost should be available to the paint manufacturers. Going forward from January-March quarter, depending on what exactly happens in the crude oil market for in next 2-3 months, I think a appropriate decision will be taken. But definitely October-December quarter seems to be a better quarter.
Okay. Mr. Gupta, just before we thank you, and again, I don't know whether you can talk about it or no, but will you be able to give us some sense of what happens on your financials? I mean, I believe the first 6 months you've clocked in a loss number. Would you be able to turn into the black in the next financial year? I don't know if you can answer this question because you're in the midst of rights issue.
The whole purpose of the right issue is to increase our working capital, which was a big shortcoming, which was affecting our production, our operations, and also to augment our capacities. Once our working capital is available, our production improves, the operations improve, and the cost of production also comes down. Our target is to turn around the company and become a profitable company.
All right, moving on. Most Indian airlines are inducting new planes each month, but passenger growth is not keeping pace with the additional capacity. October was especially tough with rising fuel bill and holiday season kicking in only towards the end of the month. Somit Sarkar is standing by to give us a sense of how bad the situation is. Somit, looks like a perfect storm.
Well, a combination of higher capacity addition and lower passenger growth impacted the capacity utilization of the domestic aviation industry in the month of October. Now, if you see the passenger load factor, that is the capacity utilization or the number of seats occupied, now that has declined to 83% in the month of October 2018, which is the lowest in the last 19 months for the Indian aviation industry. Back in March 2017, the capacity utilization for the domestic aviation industry was close to 81.8%. Now, two reasons why which led to this. Now, in the month of October, if you see the total domestic capacity increased by nearly 18% as against a passenger growth of 13% compared to last year. Now, passenger growth was low, and this was mainly because of a delay in festive season, which led to such a lower passenger growth, which also then led to lower passenger utilization numbers in the month of October 2018.
Okay, so that's your chart of the day, a very interesting one at that. But we've got Brijesh Bhatia of Deal Money Securities now joining us to give us his cues on the markets. Brijesh, good afternoon and thank you so much for joining us. How are you reading cues now? We are seeing some amount of weakness, Nifty heading back towards 10,500. What's your take on the indices?
I think we are clearly seeing profit bookings coming into the markets now, and with the expiry cards on next week. And I think 10,450 would be acting as a strong support till the expiry. And I'm expecting markets to trade in the range between 10,500 10,700 on the upside. So this is the range I'm expecting till expiry, and post that we might see volatility coming back again into the market. As if you look at the historic momentum, generally Nifty has a tendency to trade in a range of 10 to 11 trading sessions, and just we are now at around 6 trading sessions. So still, I think 5 trading sessions, markets might consolidate in a range. That's the reason I'm looking for a derivatives strangle short strategy, where I will be shorting 10,500 put and 10,700 call simultaneously, which is currently quoting at around 83, 84 rupees. And expecting this strangle short towards 35 levels by expiry. So with the gain of around 48, 50 points, one can keep a stop loss of around 20 to 23 points on the upside, which is 105, and look for this strategy on shorting on this strangle.
Okay, and Brijesh, what stocks are you also betting on today?
I will be going long on 2 stocks. Why? Because already market has been slide on dip and it has been trading at support. I think reversal can be seen towards 10,600 again. So I was going long on Arvind. If you look at the Arvind, it was resisting between 315, 320 zone, and it is even a strong breakout with volume.
We'll get back with you in just a bit. It's time to take and slip into for a short break, but we'll be back with, of course, the Fab 4 stocks of the day and as well as the dealing room check and what they're recommending to clients. But we'll be back in a bit. Stay tuned to Bloomberg Quick.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. If you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the Year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture $1 billion.
Welcome back. 28 minutes left to go for market closing. It's interesting to see how the week shapes up. It's a truncated week. Adding on to today's losses, you'll probably see a dip of closer to about almost 1% on the indices. But that's the Nifty for you at 10,544. Just stay with us for a few more moments and we will be addressing some of those your queries. But for the time being, let's find out what has made it to Darshan Mehta's list of the Fab 4 stocks this afternoon. Darshan.
So, 4 stocks that we want to speak about, we'll get in the graphics and we'll start speaking about them. Obviously, a lot of news has come out in terms of, first of all, Indoco Remedies news-based. the US FDA inspected 2 of their plants at Goa, and they pretty much cleared. There were 2 minor observations. Now, does that deserve a 20% up move? Yes, because last time around the US FDA came, the plant got a warning letter. So that's a relief, and they will be able to now start, selling out of this drug in due course. So that's the reason it's up almost 20%. There were IT season surge that happened with Deepak Fertilizer over the past few days. The company came out with a comment indicating that operations are now back to normal post this deal. Dalmia Bharat, again, traders take up long positions. It's very high open interest build-up. Open interest build-up of close to 40% on the long side. So there's definitely something cooking there. And Cheviot, a jute company, most of the jute companies are doing well in trade. The cabinet today approved mandatory jute packaging for certain of the sectors, and that's why this company is up almost 8% in trade.
All right, Darshan, thanks very much for that. That's the Fab 4 stocks of the day. As promised, let's take some of those viewer queries. Brijesh Singh and Brijesh Bhatia, both of them here with us. Mayuresh Joshi also will be joining us in just a few moments. I'm going to start off first with a query that's been coming in on whether or not to make a fresh investment in a stock like Kotak Bank and TCS. Brijesh Bhatia, you want to take that? Any sort of a trading play that's available on these 2 counters?
Can you just repeat the counters?
Kotak Bank, Kotak Mahindra Bank, and TCS.
Kotak Bank, I think it is being on a strong reversal, and I think private bank would continue to outperform over the PSS bank, and we have already seen those correcting. And I think HDFC, Kotak, and ICICI, both all these 3 are strongly rebounding and might take a lead. So I think one should stay long on private banks. Even Kotak Bank is a good buy from here on as well.
Okay, we're going to get in Brijesh Singh of Stock Access as well. Brijesh, good afternoon to you as well. And from here on, maybe we'll get back to him in just a bit. So, Brijesh Bhatia, I'm going to come back to you on one more stock, and I do want to address ACC because that's the one which has also been seeing some amount of volatility, and it's actually trading near day's lows right now. It's also one of the losers on the indices. It's at around 1463. Are you expecting more weakness to come through?
Yeah, actually, at least around 1420 is the level where I'm eyeing on the ACC. And I think if that level holds, that would be the strong accumulation level coming into the next 2 to 3 weeks. Because if we look at the weekly chart, it has been gaining a strong momentum and slightly consolidating. And if I look at the technical pattern, there's a triangle being forming out, and that holds the support at around 1420. So clearly 1420, if those levels are seen and markets showing a sign of reversal, definitely a best level to accumulate that stock around 1420, 1430. So.
All right. Mayuresh Joshi is also joining in right now. Mayuresh, thanks for taking out the time. A quick word on the markets before we go ahead and talk about individual stocks.
So, Devina, markets are expected to be volatile, at least for the next few weeks, because there's a lot of moving parts happening. And though you've seen a very reasonable correction happening in crude and the rupee retracing against the dollar, I think it's the other factor that is probably on the top of the minds right now. So what probably happens with global markets, the global volatility thereof, is clearly having a rub-off effect on our markets. So I think the volatility for our markets might continue, but it's far better to be having a stock-specific action and a bottom-up approach in these markets.
Okay, I believe we do have Brijesh Singh now of Stock Access joining us. Brijesh Singh, good afternoon. Thank you so much for taking the time out. Before I start taking individual queries as well, can you take us through what you think of the benchmark indices and where you're expecting them to move in the near term?
Good afternoon, Nagam. See, no doubt Nifty, after making a high of 10,700 plus, and after that we have seen a profit booking mode. Now on the hourly chart, the Nifty had made the lower highs formation, which is giving a negative sign. So I am looking Nifty, since Nifty has broken the important level of 10,580, 585, should have not broken that thing and is trading below that. Right now, Nifty spot has been trading at somewhere around 10,535. So, say another downside of 50 to 70 points down, I'm looking somewhere around 10,480 should hold on. If it doesn't hold on, then another leg of selling would be there, and which can take Nifty down to the level of 10,400 or say 10,420 zone. Whereas on the higher side, it's been concerned till Nifty is not trading above 10,590. The selling pressure would be continuing, and I'm looking Nifty, if someone wants to play for a fresh shot right now also, keep a stop loss of 10,590 and look for a fresh shot and play for the target of 10,480, and below that would be 10,420 zone.
Okay. I'm going to go to the queries, and I wanted Mayuresh's opinion on Som Distillery and whether or not he tracks the alcohol space closely, and any other names that come across there. But before I do that, I want to get a quick chart check on a Max Financial, because that's a query that's come in, and whether or not the uptrend that we're seeing in the stock is likely to continue, and then again, can the trading position be taken on this one? Rajesh Singh?
Good afternoon, Definedge. See, somewhere around 440, 445, there was been a resistance zones, and on a price, and it was not able to cross that thing. Whereas on the oscillator, on the hourly chart, they were making a low rise formation. So when the price has not been able to cross, making a double sort of formation with the oscillator making a lower highs, this clearly indicates the sell signal. So right now, I am looking, since 444 is a level where the supply zone has been there. For a short term, it's been concerned till this level has not been broken. Any rise can be used for a sell side. Whereas on a downside, I am looking 400, 405 as a first support level. But since the volume has been increased, I think that thing also would be broken, and we are heading for a level of 390, 395. So again, a sell call with a stop loss of 440, play for the target of 405 followed by 395.
Mayuresh, come to you on Som Distilleries. Would you be a buyer in this stock? And then again, within the alcohol space, you have been seeing some amount of traction. A stock like Radico Khaitan too has been of interest of late.
So don't particularly track Som, but for the industry as a whole, I think the entire volume story has picked up significantly, because on a year-on-year basis, they obviously felt the impact of GST, the highway ban, and that clearly had impacted volume. So I think the year-on-year comparison and the numbers that they reported were phenomenal. The second positive aspect that probably happened was the change of market strategy in the market of Uttar Pradesh. So that clearly had a huge buoyancy as far as the volume growth was concerned. The third element, obviously, which is aiding and abetting the liquor industry growth, obviously, is the premiumization story. So when you're probably talking about most of these liquor companies actually promoting their prestige and above brands, that has been very, very evident in terms of both the volume and realization growth that we've probably seen. The fourth element in terms of input costs, and again, I think the kind of expectations that one really builds in, because ethanol will now get diverted, and if that probably happens on the mandatory term of 10-odd%, you're going to probably have lesser raw material available for spirit companies. Add to that, I think what happens in terms of pricing on the extra neutral alcohol front is going to be an extremely important component to track. If you've heard the managements of United Breweries, I think they did mention that the barley prices have moved up, which means input cost inflation is probably going to hit them in the quarters to come. The fifth element obviously becomes what probably happens in terms of duty hikes, and what you've probably seen in terms of a lot of state elections coming through and general elections thereafter. What happens on this political front is a huge moving part for these companies. The sixth element obviously has been that they have taken a reasonable amount of hikes over the last few quarters. A lot of state hikes have got mandated, which probably are built into this price. And a lot of deleveraging is happening as well. So for companies like United Spirits, for example, the deleveraging is probably getting played out effectively in terms of the bottom line, and that would continue. So large element in terms of how these stocks have reacted, the expectations of volume-led price growth can very well continue. The premiumization story can very well continue for these stocks. But the moment has been pretty huge for these stocks over the past few weeks. So my own sense is that the longer-term outlook, obviously, in terms of a consumption pattern, remains strong. But buying a basket, stocks like Radico, United Spirits, at lower levels on significant declines probably is a better strategy.
Okay, Mayuresh, come in on the IT sector as well, because we've clearly seen a little bit of a reversal in a lot of these IT stocks. Let's talk about large caps specifically. TCS, perhaps, if you can talk about that. We've seen that come off too. Is this an opportunity to get into some of these names? Because we also ran a check against its, previous 5-year and 2-year averages with respect to their valuations, and they are looking cheap and at a discount to these. But how are you reading these trends right now?
No, Arkam, again, I think the large cap players did play their part in terms of posting very good set of numbers. So if you're talking about the revenue growth, I think that was in line with expectations that the street had. When you're probably talking about deal wins specifically on the digital front, a significant portion of that has come in terms of the TCVs that they reported. The third element obviously is the execution parameter, and again I think how the different business subsets have stood up. So if you're talking about BFSI for companies like TCS and Infosys that account for 30%, 32% of their top line, I think the growth there was very, very good. The second element also is in terms of how the entire employee pyramid structure is stacking up. So utilization levels have remained extremely steady and are gradually improving. Attrition levels might be a little bit on the higher side for a few of these companies. But again, a large element in terms of execution parameters, the orders on hand, should ensure that all these parameters do played out in a very logical fashion. In terms of expectations of dollar revenue growth going ahead, I think the guidance has been pretty stable and strong. And though you're entering into a very weakish kind of a scenario, the second half for IT companies, a lot of furloughs, working holidays in Q3, budgets decided in Q4. I think the general guidances and the expectation in terms of stable earnings growth, specifically because of the digital investments and the kind of contribution that it has, I think lends support. Comparing valuations on a 3-5-year average means, my own sense is that the growth, if it continues the way it is, I think top tier IT names are looking very, very interesting. So Tech Mahindra, well, there's a lot of opportunities in terms of 5G rollout on their organic communication business. TCS, where my own sense is that the earnings growth, and even though it trades at a premium to its peers, should continue. Or even stocks like HCL Tech, where engineering, R&D, and even the IMS should start supporting the organic growth.
All right, that's on IT there. A few other viewer queries. Brijesh Bhatia, I'll come to you. First one on a container co-op, and what does the trend suggest to you? The stock is trading comfortably above its 200-day moving averages. And all right, I think we lost Brijesh Bhatia. Okay, I'm told he's back. So container co-op being one, and the other one being Ingersoll Rand at about 542. How would you trade both these counters from a short to medium term horizon?
They've been actually unable to hear your stock. Can you just repeat the stock name?
Container co-op, one, and Ingersoll Rand, the other one.
Delta Corp.
Container co-op.
Sorry, then I'm unable to hear you. Okay, there's a disturbance.
Brijesh, Concor, if that's getting through you.
Is it audible?
Concor.
Yeah.
Yes.
Yeah, just hold on, let's check it out.
And if we can actually pull the Concor stock as well in the meantime, while Brijesh takes a look at that. It's trending lower by 1%. It's currently at around 671. And again, with respect to volumes, I'm not quite certain if this is average volumes. We've certainly seen a lot of volatility over the previous few days with respect to Container Corp. But if I can now go back to Brijesh Bhatia on his view on Container Corp. Brijesh, have you been able to take a look at it?
Yeah, I think this stock is heading for a good upside, and I think after a strong rally from around 540 to around 650, 660, stock is now consolidating in a symmetrical triangle formation. So if I look at the broader pattern from 540 to 660 now, it has been forming a bullish pennant sort of pattern. And I think post breakout at around 679, 684 levels, it is resuming its a new bullish trend towards 750, 760. I think if one to add long, one can add now also and on a breakout also. But adding now, it's slightly is that they have to held for another 5-6 days. But overall, I think this stock is heading towards 750, 770 levels on the upside.
Brijesh Singh, I think my audio is a bit weak for Brijesh Bhatia, but Brijesh Singh, the second query on Ingersoll Rand, if you could take that, the stock's currently trading closer to 540.
Sorry, Devin, I don't track, so would not be able to comment on that. But Container Corp, definitely it's a bullish flag pattern formation on a weekly chart. So the stock right now has given a breakout. So if someone wants to play on it, right now has been quoting at 670 or 672. So any dip somewhere around 650, 660, one can take a buy call with the stop loss of 610 and play for the target of 875. This I'm looking within a say three months to a 4 month of time frame. The target might be achieved in that way.
Okay, got that. That's Container Corp. Both the bridge issues have given their call on it, and it's a positive one. Time now to take a look at what the dealing rooms are recommending. Yatin Mota and Darshan Mehta, both of them are here with their individual channel checks. Good afternoon, gentlemen. We'll start off with Darshan today.
Yeah, so one of the stocks that's been spoken about today is Tata Elxsi. It's flat in today. It's managed to move up 1.7% in trade, but dealers indicate that the F&O trends are extremely strong. The technical trends are strong. So Tata Elxsi is the first stock that dealers are talking about. The second stock that dealers speak about is JM Financial. It's moved up on decent volumes today. Dealers indicate that HNI accumulation is happening on the counter. And the final stock that dealers are speaking about, are two stocks basically in which domestic funds have been sellers. Federal Bank and Dewan Housing Finance. Federal Bank came out with numbers a while back, but the commentary from Dewan Housing Finance, even post the numbers, was rather weak in trade. So these two stocks are something in which there is selling. But Yatin, what do you have for us?
Well, Adani Ports, that is one stock which has moved significantly in the past few days. In fact, today also the stock is up nearly 2% on huge volumes, and dealers do indicate that domestic funds continue to lap up shares as far as Adani Ports is concerned. Also, watch out for Motherson Sumi. Dealers are indicating at this point in time that there is a lot of short covering which is happening in the counter. Almost 77 lakh shares traded as far as Motherson is concerned in the cash segment. So good amount of short covering happening there, 3% up for that one. And Tata Power, that stock is down 4%, one of the top losers in the F&O segment right now. And dealers do indicate that right now the strategy is to sell today, buy tomorrow. So STBT is the kind of recommendation which is coming in from the dealing rooms as far as Tata Power is concerned.
Okay, Yatin, thank you so much for bringing us the dealing room check. And of course, we will be watching out for some of those names as we move into the final few minutes of this trading session. But Mayuresh, I'm going to come back to you on Hindustan Unilever specifically, because we have at least 3 queries on this one. And we really haven't seen Hindustan Unilever correct at all. In fact, it's not at its lifetime high of 1800, but it is still at elevated levels. What are you recommending with respect to Hindustan Unilever? What would your approach be here?
I stay very positive, Argam, and it's a clear hold from my side. I think a large element in terms of how the performance has been, both in terms of volume growth, was quite commendable in the quarter gone by, specifically in the quarter where you'd seen on a base effect the restocking had already taken place. The second element obviously is the entrenching of their distribution network. So the many Indias in India's, the strategy that HUL has probably incorporated, I think that is moving in the right direction with a lot of retail reach happening. And again, I think the kind of SKUs that HUL is probably trying to put forth through this distribution change across various price points, specifically in tier 3, tier 4 towns, is very, very encouraging. The third element obviously is the different business subsets, where you're talking about personal products, home care, laundry. I think all these different subsets with the kind of brands that they've got and the entrenching of these brands in rural areas, I think that is going to have a huge value addition in terms of their overall earnings. So I think if I incorporate certain numbers over the next couple of years, I think the volume-led realization growth should be far more reasonable for HUL. And the kind of investments that they're probably doing into their brand building exercise, I think this entire reinvestments into brand building is ultimately going to play out on their operating margins and leverage as well. Valuations might be on the higher side, they always have been for HUL, but I think that's the way it will be. So yes, I think if somebody holds the stock, continue holding.
All right, 8 minutes left to go for market closing. Time to get some closing ideas from our technical experts. Let's start off with you, Brijesh Singh, and what you're liking.
See, Adani Power looks good to me right now. The stock has been trading at 47 rupees 80 paisa. Till the stock doesn't break 46 rupees 25 paisa, one can go for a buy side, or even we can revised the stop loss to 46 rupees 80 paisa, only 1 rupee stop loss, and it's eager to break out the trend line on the higher side. So on the higher side, I'm looking stock touching 49 rupees 90 paisa, followed by 50. But I'm looking stock heading towards 52 odd level, and might be not a BTST, might be in a day or two. Reliance still looks little bit weak. It has been trading at 11.3 or 11.5. So any rise somewhere on 11.10, if it goes, then one can take a sell side with a stop loss of 11.25 and look for the target of 1080, 1085.
Okay, and Brijesh Bhatia, what about you? Closing strategies for today?
I think one should go short on Tech Mahindra, because if you look at the stock has moved in the morning about 700, but it was aggressively beaten down again, and strong selling pressure was seen about 700. So 688, 610, I think one should look for an STBT, or maybe I'm expecting target of around 668 in 1 to 2 days on Tech Mahindra, and one can keep a stop loss just about 700 on Tech Mahindra. Second, I think one should if you want to play a contra, can look for 26,300 Bank Nifty option buying, because it is being hovering around 26,000 quite strongly now. And I think next week, I think markets might see a good upside to 26,300 levels. So can take a bet around 26,300, call is quoting around 70 to 73 levels.
Right, a breach for the Bank Nifty of the 26,000 mark. Stay on with us, gentlemen. We've got about a few minutes left to go for market closing. Just one last question, Mayuresh, before we let you go, while we were on the topic of crude, in particular OMCs, if you have a view there, and within OMCs, a BPCL.
No, I think a large element of the play that has happened on OMCs since the crash that we've seen has got reflected in the pricing. And yes, how crude behaves and how the rupee behaves does work on the earnings sensitivity for these companies. Now what probably happens in terms of the next 2 quarters numbers, there is obviously going to be an element of inventory loss happening because of the elevated levels that they might have bought crude, and the way the crude is being traded at the levels that we're probably looking at and expected them to probably stay around these levels. So again, a large element in terms of the core marketing margin business, because of the 1 rupee kind of an imposition that has happened, has taken a toll. The other businesses are probably holding up. The pipeline throughput should remain strong. Again, I think the petchem business, again, a large variable of it depends on crude pricing, but because crude pricing was at elevated levels, downstream product pricing should be far more reasonable. And again, the kind of investments that they're making in terms of the new refining capacities. So GRMs are going to improve going forward, creating the much needed impetus for the overall valuations. But large element, again, I think is wait for declines to probably happen on these stocks. Within this entire pack, I think IOC, in my opinion, remains one of our better picks.
Okay, Mayuresh, we'll leave it at that. Thank you so much for joining us this afternoon and taking us through your cues. You have a good weekend. But moving on, Brijesh Singh, I also want to address Page Industries with you. Can we take a look at the chart for Page Industries? Because once again, we're seeing a little bit of reversal. In fact, it's trading near its day's lows. And well, there has been weakness. There's no doubt about that. Brijesh, how would you deal with this one? What's your view? What's your approach here?
See, hourly as well as the 4-hourly charts has been trading in lower tops and lower bottom formation. So the recent swing high was somewhere around 28,200 plus, and after that again it went into the profit booking mode, and the recent swing low was of somewhere around 25,000 or say 25,050. The only thing here is what the price is coming down, but the volume little bit is right now it's been not that much higher. So I'm looking stocks settling somewhere around 26,400 zones. So another say 400 rupees or say 450 correction I am looking. And if that thing holds 26,400 holds, then again we are trying for a the page would be trying to touch again 28,000. So if anyhow that thing breaks, then we can see another new bottom would be forming. But right now, from a chart point of view, 26,400 would be the level which I would be watching very closely.
I also have a question on Vodafone Idea, and this one is for Brijesh Bhatia. Well, it's currently also the top loser on the NSE 500, and it has lost out. Once again, this stock is also trading near day's lows at around 41, and there's a gradual uptick over the last a couple of weeks, but today it's substantially low. Brijesh Bhatia, if you can come in on your view on Vodafone Idea, how are you seeing, trade on this one? What would your approach be here?
I think this stock is slow and steady sliding towards back towards I think 35-36 levels again. I think till it is not closing around 48-49 levels convincingly, I think then there would be no trend change level as of now. Till every day, I think one should look for a short opportunity, and I will just only wait if there is a close up of 48 for a trend change. Till then, this stock is a sell on release stock.
All right, gentlemen, stay on with us. There's just a few minutes left to go for market closing. Want to quickly run through and start wrapping out the markets for you. So, truncated week by the end of Thursday's trade today. We're seeing the Nifty down by about more than 0.5%. In fact, closing in on that 1% mark, 10,526 on the Nifty. Banks looking extremely weak today. Scaled down below 26,000, but now once again creeping back up. But nonetheless, a 1% shave off on the banks. Sensex also losing about 0.6%. Mid caps and small caps, relatively, in terms of the performance, small cap index in line with what the benchmark indices has done, but the mid cap index seems to have been losing a little bit more. Let's take a look at the individual movers then on the Nifty particularly, and what's gained ground has been the likes of Z, which is up 4.5%. Adani Port gains ground by 1.8%. L&T stands tall. HDFC, TCS looks stronger, but obviously the quantum of gains this time around, barring the Z, has not been all that substantial. However, on the losing side, auto takes a hit, so M&M stacks up amongst the top losers. You've got metals, the oil marketing companies, all of them seeing a little bit of pressure building up. So the likes of a Hindalco, which is down 2.5%. You've got Grasim looking weak by 2.5%. IOC, Ultratech Cement, Tata Steel, again the flavor of commodities not working today. Wipro from the IT pack, BPCL and Axis Bank looking weak by more than 2%. So the quantum of losses outweigh the quantum of the gains as well. But Agam, what are you spotting in the broader markets?
Well, broader markets, once again, trends have been very mixed, but I'm going to start off with losers. Fortunately, at least on my list, I have more gainers as compared to losers, but Indoco Remedies, as Darshan was just pointing out, is locked in upper circuit of 20%. This is, of course, after we've had the US FDA come up with some positive news for this particular company. So this one is a positive. Deepak Fertilizers is the other one, also advancing in trade and also one of the top gainers on the NSE 500. That's up as much as 9%. Not closing at day's highs, but well, gaining 9% all the same. Capital First is the next one on my list. That's also advancing by 7%, and again a lot of strength on the back of good volumes too. And excuse me, speaking of Capital First, we also have that breakout in IDFC Bank. This also is advancing by around 6.5%. So a bunch of stocks out there on the gaining end. On the loser side, we do have Vodafone Idea. Well, it's very weak today. In fact, it's closing at day's lows, now down 8.3%. It's moved below the mark of 41. I believe one of the analysts has suggested 36 could be a possibility on that one, and ITI is the other one, which is also declining by as much as 6%. On the whole, it's been a mixed day of trade with negative close when it comes to the NSE 500 as well. So not too much to speak for, Devina. On the whole, we are looking at too much as far as the green's concerned.
Well, that takes our weekly tally in the red, taking a break from the last 3 weeks of gains that we've seen. So the Nifty Bank down 1% right now. Sensex Nifty, today's session looking weak by about 0.7%. We'll get the weekly breakup in just a bit. But quickly, if you could take us through, the broader market picture. Okay, that's the week's picture for you and the kind of losses that the Nifty has seen. 1.5% down this week. Truncated week, 4 days of trade, but 1.5% 1.5% given up. And the bigger losses coming in from the names here, particularly IT looking weak with Infosys giving up about 4.5%, Wipro giving up as well, Tech Mahindra down 5.5%, and an India Bulls Housing Finance too giving up 7.5%.
Sure, I'm going to take a look at the turnover because as we move into expiry, we're going to start seeing an increase in that turnover, especially the futures and options turnovers, and it is already at elevated levels at around 16 lakh crores. That's pure NSE F&O. Cash, well, I would say it's a tad below average, if not average, because we're used to something like anywhere between 25,000 to 30,000. There you have it. So that's as far as the turnover is concerned. I also want to take a look at the advance decline ratio on the National Stock Exchange and to see, you see, this is the last 1 hour of trade. Well, things have changed, and we've seen declines take over advances, with declines now standing at around 962 against, well, about little less than 600 advances on the National Stock Exchange. So once again, that could be a matter of concern considering the weakening of the advance decline ratio, Devina.
Well, that's the market wrap out for you. Not a particularly good week this time around. Hopefully, as we come back on Monday morning, things would have probably improved, but we'll have to wait and watch as to how things shape up. Rupee for itself, though, before we actually go back to our guests and take a final comment from them, just want to take a stack of the currency, which is definitely much more stronger. 71.06. We had that one day's market close. 71.46 is the previous day's close. So definitely looking more stronger. Didn't percolate down into the equity market enthusiasm, but let's get in quick closing comments from both Brijesh Singh as well as Brijesh Bhatia. I'll start off with you, Brijesh Singh, your closing comments as we step into next week.
See, Devina, both Bank Nifty as well as Nifty indices has closed near the day low. If we talk about Nifty, as I said, 10,480, 85 would be the first level to watch very carefully. If we are holding that thing well and very good, but I don't think so we would be able to hold because the volume has been increased. So the next level to watch on the downside would be 10,420 to 10,430, where the support lies. So I think the pain would be continuing, and the expiry might be, somewhere around below 10,500. That's what I'm looking right now from a chart. If Bank Nifty is been concerned, immediate support lies as 25,750, 25,800. If we hold, then well and very good. But here also I'm looking Bank Nifty trading somewhere around 25,400, 25,450 where the support lies. Even if we check it out, all the sectors from the NSE, except media, everything has been negative, and the negative side is more than 0.80% down. So I think there is still more pain left rather than I don't think so anything positivity right now. So the things would be little bit bearish side as compared to the bullish side is concerned.
Brijesh Bhatia, Sensex is at 35,000. The Nifty is now at around 10,500. What's your view as we move into trade next week?
I think, as I suggested, I'm expecting till expiry market might slightly in a range of between 10,450, 460 on the downside and 700 on the upside. And I think Bank Nifty has been quietly strongly holding 26,000. And I think there is the probability that already private banks are strongly outperforming, and we have seen Reliance and IT Pack dragging the Nifty majorly. Strongly sector rotations happening from IT pharma to now private banks slow and steady. And if you look at the comparison chart between Bank Nifty, private banks and Nifty or Bank Nifty, it's clearly indicating that private banks might continue to outperform in the next week, and we have already seen that sector being strongly corrected now. So the first rebound would be strongly private banks, and I think next week private banks and Bank Nifty could be a good buy. Another 300-400 points upside on Bank Nifty could be expected.
All right, we leave it at that. Thanks so very much, Brijesh Singh as well as Brijesh Bhatia. Appreciate both of you taking out the time. And on that note, we come to the end of the show. Thanks a lot for watching. From Agam, myself, and the entire team that's put the show together.